Hey, Steve, what's happening?
Hello there. Happy Monday.
Yes, indeed. And everybody should have eyes on Mr. Albert up here. So hopefully everybody does, and hopefully everybody can hear us okay. So welcome to yet another Office Hours webinar. Today is the 11th of December, and we've got some good stuff for you guys today. A little kind of a wishy-washy market, but there's always nuggets to be plucked. So before we get into the good stuff, just want to take a moment to do the legal speak and just make everybody aware of the fact that we present all of this data in all of our weekly webinars as well as our Friday webinar. It's all for educational purposes only. Now, if you do need investment advice, what to do, when to do it, what to buy, what to sell, please seek out a registered investment advisor or another licensed individual to help you navigate that maze. And for the people that might be attending for the first time, just want to let you guys know you're doing good. You found your way into a very good information source here, because we do have the best scanner on the market. But not only that, we've built quite the community around the technology. And it kind of all starts at the very top here with our live trading room that opens 30 minutes before the open. It's moderated by Barry Anderson, who's been doing it for quite a while now, and he usually packs the house with, could be 350 guys in there, could be 500, 600 at peak times. So the nice thing about that room is that it's free. You don't have to have even a Trade Ideas subscription to get in there and hear how Barry is utilizing this technology in real time. He's very good about walking people through the process. So take advantage if you have not. Of course, today's Monday. You got myself and Mr. Gomez. Steve takes the reins tomorrow, though, in the trade of the week. And we like to switch it up a little bit in the middle. We bring Dan, our Chief Executive Officer, to give you his take on the product, and he drags along with him Brad Williams, who's our Chief Technical Officer. So it's a good change of pace, always interesting and fun with those two. Of course, Andy wraps it up on Thursdays with the studio, and I ride shotgun with him. We change gears completely on Friday. What myself, Andy, and Steve, and one of our latest additions to the support team, Sean, is in there as well as of late. And it's just a free-for-all. We keep it open for 3 hours. Maybe if there's a light crowd, we'll shave a little time off. But if there's a full house, we'll keep it open the entire 3 hours from 11 to 2 p.m. Eastern time. So you can come in there and get any questions or configuration issues answered. So lots of good things to keep everybody busy and keep everybody learning as you navigate the market using our stuff. Of course, we always like to point out we're experiencing record user growth, all right? And it was flat for a very long time until we introduced Holly, the AI. And we can see, and this chart is probably a little outdated maybe, but I think we might have a little bit more up here. But just to let you guys know that it is resonating, and it may seem a little alien at first, but the more time you spend with it and the more time you spend interacting with it, just like anything else, the better you get finding alpha by using Holly the AI. All right, so I got some interesting stuff to show you guys. It seems that the good stuff was a little bit harder to find today. I think that was just the way the market was unfolding. So it's probably a good time to pass the baton over to our in-house technical guru, Mr. Gomez, and hear on the action of the indices and whatnot today. So here you go, Steve.
All right, thank you. All right, you should have a view of the SPY daily chart expanded. So this is where I usually like to come in and start by looking at a few of the ETFs for the indexes and get an idea of where we are, where we've come from, and where we might go. But, you know, again, I'm just going to start with what I've started with every week. This long trend line is still in play, going all the way back to about a year. We're about a year. This is January right here. And we had a touch here, a bunch of touches here, a touch here, and then we broke below it on some big volume. And if some of you might recall, I got a little bit of bearish down here, but said if things don't follow through, I'm flipping my hat because you got to do that. and I had to flip my hat back about here. And once again, trend line held here, trend line held here. Now we're starting to get away from our trend line. We're starting to get really overbought, maybe a standard deviation or two away from the trend line. And as I was mentioning last week, we had a couple of attempts to sell off. We had 3 days in a row that were negative, which we hadn't seen since August. And I thought, well, maybe this could be the beginnings of some sort of a little monkey bath or a shower for the indexes to kind of bring them back more into line as to where their trend lines are. But nope, can't stop this market. 3-day pullback and a bounce back higher. So here we are, just again under all-time highs in the S&P. Path of least resistance remains up. Our volume today was 1.21 relative volume, so the spiders were moving higher on some decent volume. The only thing, again, I notice on this chart is that this trend line is here, and it'll be waiting for the price action at some point, but we're not interested in getting too close to this trend line action. This is a runaway bull market indeed. Qs, very similar, same vein. I don't have a trend line drawn, but you can see a lot of these pivot levels that hold, break through, then turn into resistance, becomes support, then resistance breaks through, resistance, then becomes support. So you get the idea. These lines I'm drawing here, these are pivot lines. And that's what I'm kind of using to gauge the price action of the Qs rather than a trend line. And so once again, the important line held after the sell-off that we had last week, and the Qs bounced higher on a little bit less than normal volume. But once again, nice green candle. These are the all-time highs up here. Path of least resistance remains up in the Qs as well. The diamonds, the Dow, this is the DIA ETF for the Dow. Also, I mean, if I was to draw a trend line here, we could see the same thing as the S&P. We're starting to really get parabolic above that that trend line ascension slope. And at some point we may have to come back to earth, but again, after 3 or 4 days of selling last week, nice big bounce, and here we are again, very close to new 52-week highs in the Dow. Path of least resistance remains up in the Dow. However, the one black sheep here, IWM did not have a green day, and it kind of threw a little bit of a fit today. And this orange line again is the pivot line we're working from here. As you can see, resistance, resistance becomes support, support. We broke down through that support, but quickly closed back up. So what I'm watching for the IWM again is this 150.75 level. If we bring the Russell 2000, which is what this IWM is revealing, the Russell 2000, if the IWM closes back down again here in no man's land, well, then we really can't say the path of least resistance is up for IWM. It seems to be kind of throwing a little bit of a fit here. So the 3 big ones looking decent. The IWM, small cap, Russell 2000, not so much, but that's what we're seeing. So really, no caution flags again at the moment. A little bit last week after that 3-day sell-off, but it turns out that was just nothing more than a typical market 3-day pullback and dig in and build a higher base camp and build a higher low. Before I pass it back to Jamie, I did want to take just a quick sec and let's open up this daily chart again here. And let's take a quick look and see what sectors may be ready to go next, because you guys, this market is like it's constant rotation. I mean, it's hyper rotation. Sometimes we get a really nice sector that lasts for maybe a day or a day and a half at the most, and then the buyers leave and they go and they pick up another weak sector and pass the baton, so to speak, sector rotation. So I want to just quickly kind of go down through here today. K-Web, these are the China stocks. I'm not seeing anything there, even though this was the strongest stock, strongest sector on the board today, that is. But that doesn't mean it's going to follow through tomorrow. The OIHs had another strong day. What I'm seeing in this is, let me go back here. What I'm seeing on this one is kind of a wedge. I'm not going to draw it, but if you draw the lines from the bottom up to here, and then the lines from maybe up here coming down, it's kind of a double trend line. We're starting to build the price action of the OIHs into a wedge. So still a bit early, but there could be a breakout of the OIHs at some point in the near future. They were strong today. Steel had basically a nice gap up and then just kind of traded in a doji for the whole day. Technology had a nice day. There's a few in here that I've noticed that are kind of interesting. Again, here's oil. This is the commodity oil, and this is looking like it might want to try and move higher. If it can't, then we're talking, maybe a head and shoulders type top. Q, U, and G, forget those. Semiconductors. Let's take a look at some of the big high flyers we had coming in. You know, Micron, we couldn't stop that, but the semis had just a giant pullback on some of these high flyer semi type names. And that one looks good today, NVIDIA, but the overall semis, SMHs, they're still kind of trying to figure out what they want to do. Do they really want to bounce off of this low back here, or do they want to just kind of meander and mingle? I mean, NVIDIA looks a lot better than SMH did today because it was close to highs. And Micron, a little bit of a wick there, but there still might be some stubbornness. These semis could very easily just roll back over, and if they do, that could be very interesting. But we'll see if this big 20% pullback that they got, if they can work off of that. Couple of things I did notice, a lot of stuff just not really jumping out at me, but jets. This is the airline index, and the airlines have been the trade of the week the past 2 out of 3 weeks. The one from 2-3 weeks ago, Save, has been working pretty well. Broke through this resistance and had a really nice push. Now it's just kind of consolidating here, hopefully waiting for the next push higher up to the next level. So JETS, which is kind of a thinly traded ETF for the airliners, is kind of showing the same thing. We broke above this level and we've consolidated, and now we're maybe looking for a reason to move higher. I think that sector could be interesting tomorrow. And I also think what was not that great today was the financials. XLF, KBE, and KRE, the banks, well, they had kind of a red candle day, but in the bigger picture, I kind of think like they might be the next candidate for a sector rotation. Really nice move up in financials, and we haven't given a whole lot back. So we're just kind of sitting there. Same with the broker dealers. The broker dealers are IAI. They kind of fit the same bill as well. So it's been a really nice week last week for the bankers and the financials and the brokers and the financials. But keep an eye on here. We could see some higher prices in the next couple of days. What I'm saying is I wouldn't be surprised to see if the financials in the next day or two grab the baton and try and move higher. So that's kind of what I'm seeing on the sector front. Watch those financials. I think they could start to get some more interest here in the next day or two. And other than that, didn't really see a whole lot. Maybe the airlines as well, the JETS ETF. But that's what I got for you on my end. Jamie?
That's really good stuff, Steve. And what you said about oil, well, it's funny that you say that because I was getting gas this weekend. I'm like, well, gas is hovering down here right about a little over $3 a gallon. Of course, that's in California, right? Yeah. We have these high taxes. And I'm like, we're going to be seeing $4 gas pretty soon, and probably that's going to be when oil decides it wants to creep up into that upper extreme up there. Probably coming sooner than we like. But hey, don't we all just live and die by the oil companies and the banks anyway? So no surprise to see that banks are getting frisky up at the top, and so is oil. Nice observations there.
This orange line that I just threw in here real quick may determine whether this is going to roll over and be a head and shoulders, or more probable is another good day of movement. And if we can get a close above this line, we've only closed above it 2 days. Only 2 days we've closed above this line. So if we can get a couple of closes back above this line here, that's going to start to embolden the bulls and freak out the bears probably a little bit. So again, I try not to think too much about fundamentals or lying CEOs or lying CFOs or people with lapel pens on CNBC talking their book. I don't care. All I care about is what are the footprints in the sand, and the volume of the depth of their footprints tell me, and I can try and come to my own conclusions.
Good stuff. And Steve, your sector list has already caught the eyes of a few people. So would you mind dropping that cloud link into the chat when you get a second?
Yeah, and I have to qualify it, guys. So, I mean, here's what I'm going to do. It's going to be a 2-step process, so bear with me real quick. The first is going to be the cloud link. And the cloud link is a top list that has nothing in it. I have no filters. All I'm doing is just looking at a hand-picked list of ETFs. ETF box is checked. All right, so remember that. Step 1 is I'm going to share the sector alert with you, but you guys have a second step, which means you've got to figure out that symbol list. So I'm typing it in the chat window now, sector list, and there's the cloud link. But here is the second portion. The second part is if you guys have not done so yet, you need to create an ETF watch list. So what I'm going to do is I'm going to show you Tools, Symbol List. What you're going to do, if you haven't done it yet, is create symbol list and title it ETF. That's all you got to do. Click OK. Well, I've already done that, and my ETF has about 30 symbols in here. So the second thing I'm going to drop into the chat window are the symbols, the ETFs. Copy and paste right below the cloud link. And then for you guys on your end to pretty much tie it all together, once you have pasted those symbols into your ETF symbol list, then it's quite simple. You go back to the configure of the top list, and the symbol list tab right here is where you're going to go into this button first, locate ETF, click it, and then highlight ETF. Once you've done that, we are only pulling from the following list, the ETF list, and that is where I get just a quick look at these ETFs. I can double click today, change from Friday, or if I want the bigger picture, I can double click 20-day, which tells us steel has been the champion of the last 20 days, and gold and silver have been the big losers over the last 20 days. So that's kind of basically the simplicity in how you use that. So real quick, copy the cloud link, load to your cloud, and then you've got to reconfigure and use that symbol list to drop in the symbol list tab and enable the ETF list. So this particular scan will work just like the way you see it on my screen. Symbol list, add existing list, find that ETF, and then checkbox it, and then you're good to go, and you'll have something just like I do. And for those that don't know what all the ETFs are, the expanded column there will give you a cheat sheet on the company name, so you can tell exactly what that is. All right, let's try again. Ready to take it back, Mr. Jamie?
I got it right now.
Okay.
Okay, everybody. Hopefully the noise pollution isn't too bad. It's always Murphy's Law, right? A loud truck is going to pull up and beep as soon as you want to talk to a group of people over the internet. But anyway, I don't think it'll be around too long, if you can even hear it now. Hopefully not. So, excellent recap by Mr. Gomez there.
Thank you.
Look at number 2, expectations. Okay, I've heard about these things before. You're thinking to yourself, what are my expectations of the trading day? Because guess what? Sometimes they're the same, but more times than not, they're different, right? It's like sailing. We pack up the sailing boat, pack up all our gear, expend all this effort. We get out there, no wind. Pack everything up, go back home. You might want to check and see if there's any wind before you go sailing, just like it's crucial to set up proper expectations for the market before it ever opens, or shortly after it opens, I should say, because we have to kind of, like the old finger, stick it up in the air, see which way the wind's blowing. More importantly, if the wind is blowing, what's the direction and how brisk is it? So expectations today. What I like to start every day off with is waiting 15 minutes and then taking a peek at a couple of my favorite windows that I like to try to get that information from. So for those of you who might be regular attendees, you know that I like to watch these compare counts, which in essence, short version of what these guys are doing, they're looking for accelerated buying and accelerated selling, stocks that are doing more than they should be doing in that particular 15 minutes of the open, and then these windows keep count. So in essence, think about stocks hitting highs, stocks hitting lows, but only doing massive volume. And if you're familiar with the open, you know that, for lack of a better description, all volume is massive. It's like a madhouse, right? It's like the floodgates open up every day at Hoover Dam, and it's just this tirade of, this torrent of water. And if you're standing down there, if you know how to hold on, you might do okay. But it's very perilous action. That volume subsides, and then things kind of go to quote unquote normal after about 15, 20 minutes, but it's still subsiding. Now, the institutions, they leave little digital footprints in that first 15 minutes. So that's kind of what we're trying to do here, is figure out which direction are they going to be heading today. So after the first 15 minutes, I get these readings, and let's focus on the two on the right, because these are the larger cap stocks. Whether it was the 4 billion and higher, which is the second from the left, or the one all the way to the right, or the one on the right, I should say, is 5.4 billion. So the two windows on the right are looking at the higher cap stocks. And what do we see after the first 15 minutes today? Well, we had a bias, green, 52, 53. We could just call it 52.5, 53% between the two of them. which is a bias above 50-50. Now, it's not the strongest bias. And typically the way I gauge these is, I like to see 55 and higher. Hell, I like to see over 60. But those 60 plus days on the buy side only come around maybe 2 times, 3 times, 4 times a month, right? And those are the big days where we have the big move and the big continuation. It's never an easy game to figure out that that's the day that's in store for us. But by watching metrics like this, we can get a little bit better feel for what might happen.
So have you been reporting this at 15 minutes after the open now instead of 20? Or?
Well, originally it was 15, then I went to 20, and then I went back to 15 because
Okay.
I think that's just the best little time frame to look at. So yes, I tweet these out every day, 15 minutes after the open. So this is actually you're viewing this right out of my Twitter feed. So whether you follow me on Twitter or whether you watch these, and by the way, I'm going to drop these windows in the chat, so those of you who do not have them can pull them up and start observing, get used to them.
So you just felt that the 15-minute timestamp was better than a 20?
Well, whether it's 15 or 20 minutes, I don't really think the data is going to flux that much, right? But the interest in the opening 15 to 20 minutes is I love volume, right? And I like to try to track the institutions and find my chart pattern for those stocks that are in play today, because that's where the volume is, right? And when there's volume accompanying your play, if it's a continuation play, that really does impact the odds of that thing doing what you think it might do, right? And so looking at these readings after the first 15 minutes, and by the way, getting back to the institutional thing, if a guy's got 1 million shares that he's got to get out for a client, when I say a guy, I mean a trader, professional trader at a desk, these institutions, whether it be a hedge fund or any other large institution that manages money, they'll call a guy up and they'll be like, and this is way before the market opens, hey, I got 1 million IBM to get out before the close today. Well, they can't just start pounding the market, hitting market sells. They would impact the price too much. So they have to be sneaky about it. Now, they're going to get maybe 10, 15% of that order done right off the open in the first 15 minutes, but they can't get it all out. But those extra large chunks that they are executing, that's what throws up the little flags, right? So 52, 53% is not a strong bias. What were my expectations? Well, I should probably focus on the long side today, but the follow through is probably not going to be there. And of course, that's what the large majority of these plays did today. You get a little push through the entry point, and they come right back down. So first and foremost, it tells me, today's going to be a take it as it comes day, and not really try to hold a lot for continuation. Of course, there's always going to be 1 or 2 that continue, and we'll talk about those as well. So in essence, without spending too much time looking at these same old windows, a slight bias. If it would have been 55 or higher, I would have been a little bit more apt to try to get a little bit more out of these long plays. And when you see the 60s, well, it's probably going to be a very good day, so you don't have to be near as selective. But today was a day of keeping powder dry, keeping that gunpowder dry, not trading out of boredom, taking the moves as they come, but not trying to push things, okay? So interestingly enough, let's just push this guy out of the way. Let's just look at the SPY for a second here. And of course, we got my 5-minute intraday candle here. Oh gosh, I need to get rid of some of these lines. It's just getting silly. Okay, so as Steve was pointing out early, we swooned down from that prior high. We found a little thing here and click, click, click. And of course, we trade down and we start gapping back up. Now, before I even saw my compare count windows this morning, before the market even opened, what can we notice here? Well, we got 1, 2, 3. This is the 4th consecutive green candle in a row. We've moved from here to here. That's a little bit of energy expenditure. Then when I also see my compare counts barely coming above 52, 53%, that kind of tells me, all right, everything's gelling here. This makes a lot of sense. Seeing this action, seeing this energy expenditure, now seeing compare count readings, it tells me, well, we're probably going to have a northern draft, an upside draft, but it sure isn't going to be just buy it and forget about it. There's going to be fluctuations. And of course, that's why I wanted to point out the 5-minute candle here. 5, 10, 15. So we have to wait for this candle to close. And so in this little red candle here, you probably can't see real good, but that's where I took my compare count readings. And although it wasn't a strong bias, it was still an upside bias. What happened soon thereafter? Whee! Hey, you're right. Oh, if we didn't take the cookies, we're right back down to flat. And as the market is so good at doing, you know, one more whee, and then even lower than the prior one. So at this point, everybody's probably thinking, geez, you know, what are we going to do? We're going to go down. We're going to go hit lows. But of course, was not to be had. March up, then a higher high. But then look, whee, back down again in the same little game. So there was an updraft, but it wasn't the easiest thing to stick into. And it doesn't matter if you were trading the SPY or any other stock that looked conducive, you were getting the same type of action. So, you know, just trying to lay it down as to, hey, expectations where there's going to be a little bit of upside, probably not a whole lot of follow through. So when the plate comes around, you better grab a couple of cookies because the crumbs will be all that's left when it comes around again.
Were you going to share the link for big cap movers? Did you mention that?
Big cap movers.
I'm answering Matt's question. I'm not sure if I heard you say you were going to share something, but I forgot what it was.
Well, I'll show you the compare count windows, and I'll also share the window that I showcase after we go over the Holly activity.
Yeah, which is what I think he's looking for, the compare count, big cap stuff.
Yeah, no worries, Matt. We'll get it in there.
Yes, Greg, we can create compare count windows from scratch, so you don't have to use the pre-configured ones. That could be a content for another day for sure.
Yeah, and if we have a little bit of time here, I'll gladly pull up a blank one and kind of walk you through that process, because they are the windows that kind of go a little bit overlooked because people don't really understand what they're for a lot. But once you start using these guys, and of course I'm using them for one specific aspect, but that's not to say that people aren't using them for different things. It really just depends on what it is you're trying to keep count of. All right, so now let's talk about our AI Holly today. Now, of course, since Holly usually comes to the party with a long bias, it was very interesting today to see what she came to the party with today. And that is only 6 strategies. 1, 2, 3, 4, 5, 6. You know, that's on the lower end. Usually we see her come with 10, 11. When we start seeing her show up with 12 to 14, that's the higher end of the strategy complement. So she came in a little on the light side today. Now, after we've kind of seen what the market did, and you know, leading up to that, kind of makes sense. She wasn't seeing a whole lot of opportunities. A lot of strategies simply weren't making the cut out of that 40 or so that's in her base. Only 6, and 2 of them were short strategies. So we only had 4 longs today, even though the bias was long, not quite as biased to the long side as she usually is. Now on the trade count, a little bit different of a story here. So we can see all the trades that were executed today, and out of all the trades, only 2 were short. And surprisingly enough, these were in the last 1 hour. That's the name, Power Hour Short. Only spit out 2 trades and clipped out a little bit of profit on both of them. After we've already seen Holly struggle all day, though, trying to go long, no big surprise there that the Power Hour Short did yield a little bit of green, although it wasn't a lot, but it certainly helped her pair her damages that she had sustained earlier. So once again, what is Holly other than being an AI that delivers to us these statistically inclined entries? But today is when she's kind of functioning as the canary in the coal mine, we like to say, because it wasn't like she got up and then kept giving it back. All right, barely up a little bit in the first, you know, a couple of entries, but never really could get any traction. And then whoosh, risk on. Same thing, could never get any traction, risk off, whoosh, never even tried to get back to flat. So you see, after the first 15 minutes, well, let's go over these steps again. Ooh, market sure did expend a lot of energy getting back up to this level. Ah, okay, now I see my compare counts just barely green. A little bit of upside, but not much. Then we see Holly struggling. Didn't even see a trade to execute until almost 45 minutes, and then long, 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 long. And what do we see here? We see that not working. So we have to fold that into our expectations as well. Markets expended a lot of energy. My compare counts were just barely green. And now Holly is having a hard time making any long money today. Now, that's kind of like the equivalent of three people that are experienced traders going, take it easy today. There's going to be some opportunity, but not as much as we'd like to see. So, be very precise, be very selective, and keep your powder dry. Today is not a day to go, firing half-cocked just because you want to trade, right? And of course, we're getting into psychology now, not to go down that rabbit hole. But for what I saw today, a couple of entries, but there was a lot of hand sitting going on among the people that I speak to on a regular basis.
Yeah, feeling the need to trade, the need to jump in and push a button and make something happen when there's nothing really happening that normally fits your methods, that's a recipe for not good.
Yeah, and I'll just take the time to address the user that just asked the question. So how to know when Holly will work and when not? I lost money today and that's no fun. Well, keep in mind, there's no way to know when Holly's going to be profitable before the session starts. Nobody ever knows that. But it's about the averages, okay? Today was just not, one of the more conducive trades. Now, to say that there's nothing out there that's working, I'm sure there are people out there that had wonderful days. I'm sure there are people out there that had losing days and everywhere in between. But it's how hard was the wind blowing. That's what we have to do. So hopefully what I've shared with you is going to assist you in figuring out how aggressive to be, whether you're watching Holly or whether you're watching any of your other high quality windows that are not Holly. Because in essence, that's what Holly is. She's just another high quality window, but this one is being generated, the symbols are being generated by statistical probability, all right? So, once again, there's no way to know in advance if Holly So yeah, Holly lost 58 cents on 9/11, 14 trades. Okay. Now let's talk about some of the trades that she did make. And of course, there's just not a whole lot to talk about because when we look at the majority of her trades today, she was either closing the ones that weren't working early and looks like she was saving money, 5 versus 6 cents, 8 and 6 kind of equal there, 3 and 9. 11 and 15, the same, 3 cents away and 6 cents here. So stops hit and her getting out after the trade's not working or all the reduced risk, looks like she was doing a pretty good job at minimizing the trades that she was wrong on. All right. Now, usually there's a lot more risk on money to talk about here, but due to the nature of the day, not the case today. But this one kind of jumps out at me because LC. She reduced the risk, and when she did that, she flatted the trade. She bought it for 365. She got out for 365. Now we can see here risk on, meaning had you stayed in the trade and it's reporting the price as of up here at the close, would have been a 26-cent mover. So this is a great example of Holly and deciding to go risk on when she's exiting the trade. Now, Holly calls the buy right here at the 365 level. That's the blue line that corresponds. The blue arrow is also placed here so you can easily reference the bar in which the signal was generated. So Holly buys it here, and then we get a sideways action. Now take note, the hard stop is down here. This is something that we always have to stick to, whether it's our own manual trades or Holly's trades. As Steve likes to say, we don't ever want to move the goalpost. If this would have encroached on a stop loss, and we're like, ooh, it's almost there, I'm going to adjust it to 325. No, no, no. That's a violation, okay? But what we can do, once Holly brings the statistical entry to us, and by the way, that is her strong suit, we can probably interact with her and sometimes make a better exit. And we can go about that by a couple of simple processes. Number one, we can notice when she's getting out and do half and half. Okay, Holly, let's say we take 200 shares here, and notice the highlighted area here. That's Holly's time spent in risk off, obeying all her stop losses, profit targets, and timed holds, and the ability to exit a winner or a loser earlier by executing reduced risk or profit save. So we're just running flat here. You know, we're up, we're down, we're up, we're down, we're flat. Holly's like, this thing's not working. Time goes on, it's still not working. I'm going to cut it. So she does that, and she flats it. Now, being humans and making the entry here and getting a little flat sideways action with, you know, a little bit of an excursion down here, but not even half of the way down to our stop price, we can acknowledge that Holly's getting out, and we can choose to stay in. We go risk on. We accept more risk in hopes of making more. Now, in this case, that would have been a good move, but let's go back to what I said earlier. To get used to this process, just do half. I'm in 100 with Holly. Holly's getting out. Okay, Holly, I'll get out of 50 with you. I'm going to adjust my stop loss or keep the same one. That's up to you. That's a personal preference. And had you done that, you would have flatted the first half, and you would have been able to exit for a profit on the second half. So that's a simple way to get used to risk off and risk on. Do half and half with Holly when you're in a Holly trade. So that's really the only example of risk on anything, you know, being higher than when Holly got out. It looks like on the power hour short, not a bad short play that we got right here. Of course, we get a little bit of what? Sideways action, a little pecking at the entry, but certainly not even an inkling that it was going to head to the stop loss. And we can see Holly gets out right here to the end of the shaded area, and then it just did a little sideways dance into the close. Now, Holly, you know, made money on the short, so, you know, it's always a good idea. Well, should I keep an eye on this one for the next day? And of course, you know, if I'm just kind of eyeballing some stuff here, we could try to figure out if it's got any more room on the next session. My eyes go here, Steve, initially. If you know, of course, you know, we got the gap down here, but it might have a little bit more room in it. 28.17 down to 27.41. So, you know, if this one looks good on the open, or maybe 15-30 minutes, if they don't gap it down, if it opens up pretty close to its close, does a little sideways dance, I want to keep an eye on that one, because we could have a move down to here moving forward tomorrow. And let's see, the other, and of course, power hour short, Holly does repair a little bit of the damage. The other short that she had today was this guy right here. And of course, it just seemed like whether it was a long trade or a short trade, this was always the action that we were getting. In the money, not for long, pass back up above the entry line, act like it's going to run the stop, settles back down, and then pushes through. So not really any earth-shattering trades from Holly today. She posted a losing day, but hey, that happens. And we've got 4 more days left in the session, or excuse me, in the week. And I bet before the week is out, hopefully we'll see her green for the week.
You know, a lot of times, like on that LC chart, that heart feature can be one that can help keep us in the jump rope, keep us in the swing of things and not lose track. Looking at the daily, which she's uncovered or has covered, there we go. There's a little bit more room in that one to maybe run up and close that gap. So close on highs today, had a nice bounce off lows in LC. Could be one to watch and set, you know, put a heart on it or set an alert for today's highs to see if there's any follow through, but there might be a little bit of meat left back on that bone. But other than that, I didn't see much in terms of things I want to keep track of going forward after today's trades.
Yeah, of course, you know, when Holly doesn't post numbers, everybody's a little disappointed. But after I saw my compare account readings, and we've all known the market ran and expended a lot of energy. So once again, it's about expectations. If you have proper expectations, man, you're ahead of most of the crew, most of the trading population out there, because a lot of people are just like, well, time to trade again, can't wait, let's see what happens, you know. But really tempering your expectations, it speaks volumes.
Let's follow up on that heart, because Bill is just asking, well, how do you
Sure.
set the heart symbol? So in the chart, you click the heart just like a social media like.
Mm-hmm.
Well, now we have a channel, and in this channel takes you away from your main page, of course.
Yeah.
But on that channel is a list, two scans. One is a top list, kind of like I did with my sector. Okay, so no filters, just sort how you want. And he's just going to go right to the source.
Right.
Okay.
I saved my layout so I can just immediately retrieve it.
Okay, so that bottom one is basically, that's your list right there. And so everything that has a heart on it is going to be dropped into that top list as a symbol list. So the idea being is, okay, who's got the most volume today? Who's up the most today from the close? Who's up, and however you want to break down that data, those are all going to be the charts that you've liked in the near past. And so if you want to turn a heart off, basically you would just use, again, that list as your main list, and then just turn the heart off as it is. The other window has got a lot more stuff going on in there. It's almost like a stocks like this. Basically, it's using the symbol list that we have of the stocks we like, but it's showing us the entire gamut: new highs, new lows, standard deviation, running up, running down, explosive volume. Any of those items in that particular scan could show up using the symbols that you have in your heart. So it's a kind of a new feature. The channel is designed to work directly with the heart feature, and those two windows are designed to let you know, which ones are in play today and which ones are asleep.
Good stuff.
Is there a way to see all of those tickers in one list? That's it right there. That's going to be your list. You go to the heart channel, Don, and look at that T window. That's all of them. That's going to be every single one of them. Okay.
Good deal. Okay, so on a day like today, there are always stocks that are moving up, moving down. Of course, if you're focusing, let's see. No, I do not want to save. I'm so used to saving layouts. Okay. Load today. There we go. All right. All right, so before we move on, I do want to show, and this is for the user that's asking about Holly and making recommendations on how we should improve it, all right? So let me just show you a little chart here real quick here, and then maybe you can use this information to, well, let's see here. This chart's going to take a while to load up, so I just want to get it going here, and then we'll proceed. Give me 1 second. All right. So we'll circle back around to Holly here as far as what to expect and how the model has performed, because I think that's information that everybody has to have. You have to have all the information before you can, understand how we're doing this. So I'll be happy to show that in just a second. All right, so now let's talk about some of the things that we're going up today, and we'll just kind of get rid of Holly for now and focus on this window. Some of you may already be using this window, and if you are using it, hopefully you're getting some really good trades of liquid stocks that are going higher, all right? And if you're not, don't worry. I'll also drop this one in the chat as well. But as we can see here, turbo up, family no resistance. This window is only showing me stocks hitting highs, and I've segregated it 3 different times in here, so it's 3 different versions of the same strategy. I've capped them in market cap, 4 billion and higher, between 2 and 4 billion, and the yellow colors are below 2 billion in market cap. And of course, this little guy is pretty much spitting out symbols all day. Today was a slow day for it as well, but we can see here some of the names that were coming through. Of course, am I, or is anybody else that's watching this window, are we taking everything that comes through? No. Are those realistic expectations to go, I'm going to make a window, it's going to be so good that everything that comes through it is just going to be textbook, and I'm going to buy these things and I'm going to have a great day? No, those aren't realistic expectations. Not only if you're talking about this window, but any other window that you might configure or top list that you might configure. The goal here is to set up what I like to term high quality information streams, right? Now, does that mean we're going to be jumping on everything that comes through? No, because it's not that precise. And if you try to get too precise, you're going to paint yourself into a corner. You're going to be sitting there all day waiting for something to come through. When it finally does come through, you're going to feel so compelled to trade. You're going to trade it whether it deserves to be traded or not, right? So try to keep that in mind. We want to create high quality information streams. Now, for me in this window, high quality dictates don't even bother showing me unless it's doing some really substantial volume, because that's the gas in the tank. If there's no gas in the tank, we might get a little ways, but we'll probably be coming back home pretty soon, or finding someone to rescue us. Now, this one today, if we go through all the symbols, and of course I typically wait about 30 minutes to give me some type of pattern to discern, right? So right about 7 o'clock my time, which is 30 minutes after the open, I had this little guy come stumbling through. Hey, look, here's 5-minute candles. It's just nice and range bound in the first 25 minutes, and then what happens? It breaks out of that range, and not only does it break that range, but it does it with substantial volume. I can see that right here. At the time, it was doing 3.5 or 3.2 times normal 1-minute volume, so that's good. And we can see right here, relative volume was already rocking at 2.36. I like to see high relative volume. I also like to see confirmation on the smaller time frames that yes, indeed, the volume is done. Relative volume is slow to change. It's not the best thing for determining, okay, right now, is the volume still high? So we got the stock breaking out of the range right here, signaling the new high with volume, and look what happens. It goes higher, comes down here, kind of settles out. Now keep in mind, if we're in this trade, no matter if we bought it anywhere in this candle, typically using a 15-minute look back to ascertain stop loss. 5, 10, 15, stop would have been right down here, right outside of those wicks. No attempt, a nice push, more sideways movement. Now this one sets up, once again, in a very clear pattern. Maybe we're in 100 here, testing the waters, still a little early in the day, but we want to get a little skin in the game because we like the setup, and we've got the volume confirmation. We get a little sideways action here. We get another incursion with high volume. Of course, one of the things that newer traders have a hard time getting into the habit of is adding to a winning position. And if you identify the buyer early in the day, a lot of the times it's going to present you with a second opportunity, in which case happened here about 1 hour and 45 minutes in. So that's one of the ones that the high volume kicked out today that looked pristine, because keep in mind it's all about timing. If we weren't in the chair during this first really attractive period and later on we got new high coming through here, well, yeah, it's hitting a new high and the volume's high, but we're way out of sync for the pattern that we're playing here, so that's missed money. All right, it's all about the timing and plugging them right as they're breaking the plane, assuming that there's good risk involved. So in both of these, risk area for the first entry, risk area for the second entry, and look at all the reward area, much, much bigger, and that's always what we want. Now, the only other one that came a little bit later in the day was Triple R. And of course, the volume didn't really, I wasn't getting any hits back here because the volume wasn't there. And I wasn't even aware of Triple R today. But as the day progressed and we slammed back through the low one more time, and then in this bar right here, the big volume kicked in, and as soon as it penetrated that little area right there, we got the signal. And then of course, we got this big up move, and of course, a little pushback at the end, but plenty of time to decide, okay, where do I feel comfortable and want to take it here, 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 or we can either play the same game that Holly does. Get out of a little bit on the first push, readjust your stop loss for the second, and you get to enjoy a higher move. If it folds back over on you, you made money on the first one, but not the second, but it's still a profitable trade. Now, the added bonus here is the no resistance aspect of these guys. I'm also making sure that they're in blue sky territory over here. And of course, doesn't guarantee we're going to go up. It's a very nice attribute to have in a long trade. So that's what we have going on in this window. It's not going to go crazy every day. It is going to spit out a nice handful of stocks. Is everyone going to be pristine? No, that's what we have to rely on our eyes for. But by removing the volume factor from the very beginning, we're increasing the odds that the pattern continuations that we like to look for have better chances of doing what we think they're going to do. All right, so just catching up on questions here. What are the rules for the Turbo Up family? Well, the rules are find the pattern that entices you, okay? If Jamie likes range break patterns, then if that pattern is not intact, I will not trade it. So the rule would be, if I'm not seeing a range break, first range break here, second range break here. If I see it up here and I didn't participate down here, then the rules are, sorry, pal, you missed the trade. Here was the sweet entry. Here was the sweet entry. Boom, it's gone, it's over. You're going to be chasing up here. Risk is not the best up here because it ran through a lot of energy getting up here, all right? So as far as the rules go, it's, you know, if the pattern is intact and I can get it just as it's breaking that plane, well, that's a good trade, assuming the risk is in place.
And that particular scan does not work pre-market, correct?
Correct.
Yep. Okay.
I'm pretty certain. Hey, the cool thing about TradeIt is we can always get the answers from the window itself. So I'm just cruising on back, boom. You can see today's the 11th. First tick was
9:30 Eastern.
1 second after the open. We don't see any pre-6:30 reportings here.
West Coast.
Yes, West Coast. So, you know, once again, simple, but very powerful. So in essence, what are we keying off of in this window? A little thing we like to call price action and volume, right? Which are two of the best metrics you could ever focus on. And then when you stack Holly, the statistical model, on top, you got a real good power trio there. All right, so before we progress, I'm going to go ahead and drag the Holly chart over here. So as with any trading system, Holly can have some losing days in a row, especially when we're topping out on the market. But what you're seeing right here is how Holly has performed against the S&P or the SPY ETF since inception, which she first came online in January 2016, and this is how she's been doing thus far. So yeah, we're going to see Holly have losing days, but that's not how we judge the AI system. We judge the AI system on how it's done since inception, how it's done over the last month, the month before that, and so far it's holding up quite well. All right.
I like to call that casino odds.
Right. We're taking casino odds, which, you know, that's why casinos are always in existence and more states are allowing gambling. Why is that? Because it's money. Of course, there are other macro things in play there, like it'll create jobs and all that stuff, but really the main reason is the casino is going to make money. And they make money because they know the odds are in their favor. You know, you might have some guy, some high roller fly in there and really crush the blackjack table, right? Yeah. But he's the anomaly and not the norm, you know? And of course, they've got tactics to employ to try to get that money back. Sometimes they do, sometimes they don't. All right, so Turbo Up family is the first one coming across. I'll label it.
So guys, he's going to drop these into the chat window again on the GoToWebinar toolbar there. Just click the little triangle next to the word chat, and that'll open up that window where I earlier dropped my settings and my ETF list, and Jamie's going to start dropping some stuff in there as well.
We'll have the compare account families. For compare account family, that's in the form of a layout file, but don't worry, you'll just open it up and those little 4 windows will pop up and you can move them around and save your layout again. And Don was asking the question about Holly. Who's putting the criteria into Holly? Who's feeding the beast, right?
Crowdsource.
Uh-huh. That's, you know, there's a little bit of me in there. There's a little bit of Dan. There's a little bit of Brad, a little bit of Steve, a little bit of Andy. So we come up with these statistical sets that might have 50,000 trades over a 40 back test day period that look very favorable for improvement, but there's just way too many trades. See, that's a good thing to give the AI because it's high quality data already winning above X, you know, X amount above 50%, and then we feed that to the AI and the AI improves upon it. Right.
You might even add the AI takes a sample data and holds it aside while the configurations are being done. Once the final score is created, then the out-of-sample data comes back into play, and then the scan is once again run through that out-of-sample data, which I'll also call virgin data because it wasn't used in the configuration in the first place. So that's standard operation for machine learning AI. Don't get caught trying to curve fit something that works really nifty with all the data you have. You've got to hide some of the data on the side, and then once you've got the system set the way you think you want it, if you can run it through that out of sample data or virgin data and still get a good score, then that's the final step in the process. But to answer the questions, we feed the AI basic strategies, and the AI completely reworks them and hones them down and shaves them and adds filters and brings them down from a few thousand trades to maybe just 100 trades.
Yeah, it's like we provide the slab of marble, and then Holly makes the beautiful statue out of it. All right. So Nav, if you are on a mobile phone and can't access the chat area,
I'll send him the email. Yeah.
Pop us an email, info@trade-ideas.com. We'll get that routed over to you, no problem. Looks like we're at the top of the hour. So thanks for attending, everybody. Scott, if you're ready, Scott's going to talk about the latest coupon code and how if you're kicking the tires and you want to sign up, save a little bit of dinero.
Yeah, thank you. Sounds good. A couple items on the way out, including that code. See which slide you land on there. Yeah, if you're an Interactive Brokerage client, make sure you contact us about trying out Brokerage Plus. It's still free if you're using Trade Ideas Premium to tie your Interactive Brokerage account in for auto trading. So it's no longer only in the beta, it's also in the production version, but we refer to it as if it's in beta because we haven't released it as a separate product yet. So if you are using Interactive Brokerage, email info@trade-ideas.com for help setting that up. We have a podcast. A new one just came out last week and very timely. Jamie talks about his early forays into Bitcoin-ish kind of territory, so do check that out. Just search for Trade Ideas Podcast in your favorite podcast app and click on subscribe, and then go ahead and download the back issues, including Fridays, and then there'll be a new one this coming Friday, and that'll be the last one for the last 2 weeks of the year, and then we'll reconvene again in January. So do become a subscriber for the podcast. We have a 15% discount code that's good this month. The code is HOLLYDAYS, all caps. And you can also download this slide and some of the other ones by expanding the handouts panel on your GoToWebinar interface, clicking the blue link to download and grabbing that PDF. So you can use this code anytime this month to save 15% off your first month or year of standard or premium Trade Ideas. You can also use this code to upgrade from standard to premium from the account management section. Just go to the home page, click on login in the upper right, and then after logging in, go to change my subscription and do that using the code, and you can save on upgrading too. Remember, all the subscriptions come with a full hour of one-on-one training. So once you subscribe to Trade Ideas and you've watched some of the videos, come to the trading room, go to the webinars, also sign up for the 1 hour of training. It's with either Jamie or Steve or Andy or Sean, any of the trainers of your choice, whoever's available, and it's the best way to get going with Trade Ideas to make sure you understand it. Email us info@trade-ideas.com with any questions, or you can reach out to Steve or Jamie directly with those emails on the screen. And follow us on Twitter and Facebook. Jamie is QuantBot on Twitter. Steve Gomez is Today Trader. Thanks, everyone. We'll have the recording up later on tonight or tomorrow. Thank you, Jamie and Steve.
Thanks, everybody, for popping in.
Yeah.
Steve, Scott, we'll see you on the other side.
Yep. Later, y'all.